Hey traders, welcome to Charts and Coffee. It is FOMC Wednesday, which means we are all waiting with heavy breath and bated breath. Is it heavy breath, bated breath, and coffee, more importantly, as we see what the Federal Reserve has decided to do, whether it will be a quarter point cut or whether it will be a half point cut in terms of that decision today at 2 p.m. As we're going into that decision, we did have some home sale numbers, and ultimately you can see the volatility that we saw at 740, which if you're ever looking at, intraday action and you're looking at an extreme amount of volatility at a particular time of day, what I typically want to start with is what was scheduled that maybe I forgot or wasn't aware of, especially if it's before 8:30. It's likely not going to be a U.S. data point unless there's an FOMC speaker somewhere, well before the bell. A lot of times that's going to be things coming from Europe, the UK. Not a whole heck of a lot. We had the 8:30 building permits, housing starts. We'll have 10:30 crude oil inventories, all of which will fall a distant second to the FOMC decision. But early this morning, we're seeing quite a bit of reaction, which I'm actually a little surprised that we're seeing as much movement as we're seeing, especially considering that largely the broader averages have discounted 65% probability as it stands right now, 63, that we're going to get a half point cut. This is going to be difficult. While it's not fully discounted, and we'll never know if something is absolutely fully discounted, but do the majority of traders and investors expect the half point cut? That is an 80% cutoff for me. So if I see us up near 80%, I consider that to be fully discounted. This is still a coin flip. And there's really two scenarios here. One, the Federal Reserve gives everyone the quarter point cut. The markets sell off. Bond yields go up, dollar goes up, gold might go down, but equities will likely sell off. But then 30 minutes later, Jerome Powell comes out with the pom-poms, and he absolutely talks about how vigilant they're going to be about future rate cuts. And this is just the beginning to sort of offset that disappointment of a quarter point cut. All right, well, he comes out with a half point cut. And these are the two scenarios, gang. And there's a half point cut. Believe it or not, I would still expect a little bit of a sell-off because that's what's expected. So maybe not as dramatic a sell-off in the broader averages and indices as a quarter point cut, but there'll likely be a little bit of buy the rumor, sell the news, take profit on that pullback if we get the half point cut. And then follow through from the half point cut, and the profit taking that we see will largely be dependent on the rate statement and the press conference that comes after. So the rate statement will be somewhat important because it might shed a little light on what's going to happen as we go through from the September to the November to the December meeting and into 2025, where there is largely expected to be quarter point cuts at every scheduled meeting between today, now, and June, and the June meeting of next year. So that's where we sit. And if we can think about the different scenarios and how we're positioned to deal with it. So let's talk about positioning and where I sit. Because look, I really got to the point where I think for any of us, talking about our positions is a lot better than sitting around and aimlessly analyzing what markets are doing. So I'll tell you right now what I've got. That font is really, really big, but this will work. If you take a look here, I've got one more September 20, and now it's just too big. I've got one more September 20 position that I'd like to close, ideally before 2 p.m., ideally before noon, but most definitely before 2 p.m. And that's that XLP staples. Take a look at what we're in. Staples, financials, healthcare, industrials. That's where I'm placing my trades. This is what we're alerting to the members. in the Sector Secrets Mastery, notice what's not here. Do I care where Tesla's going? Nope. Do I care where Nvidia is going, or Meta, or Apple, or Google? No tech. No tech. If we look at what has the best bullish structure, because let's not forget, I think a lot of folks do when I listen to them talk, let's not forget, this is a very strong equity markets. Did we not just hit another all-time high on the SPX, the S&P index the other day? And yet you think, the clouds are building and the storm is coming. Maybe it is, but this is what I think the storm will look like. And this is how I'm going to set up positions. I do expect a little bit of a pullback, and I'd like to buy into that dip, which is exactly what every one of these positions has been designed to do. And I think another thing that's worth mentioning is look at the number of calls. There's nothing bearish here. I'm looking at dips and strong environments because this is overall a strong set of indices overall, right? So one put, and isn't that funny? I lost money on the put. Serves me right. All right, so let's get to the questions as always. If you want a more full and thorough discussion of what I'm going to do for the FOMC, two things you can do. Join me in the Sector Secrets Mastery. Check it out at sectorsecrets.com, or I recorded a really in-depth video, and that's available at the Simpler Trading YouTube channel. In-depth video positions and what my plans are for the FOMC, where the strength is right now. Check that out, and you'll see exactly what we're thinking about setting up as we go into not just after 2 p.m. today, but frankly, this window extends to tomorrow, Thursday. A lot of times, especially recently, last year or so, the volatility after the FOMC has not necessarily even been the hour or so after the press conference is done, but it's been the day after. So remember, we don't have to do anything today. It might be worth waiting for tomorrow for those positions. Okay, let's get to it. Here we go. First up is, let's see, Nomo FOMO says, I'm proud of how well I prepared for today. Got the popcorn, Junior Mints. Oh my gosh. Large slushy. If nothing else, you're fully, you're carb loading there. You're carb loading for the rest of the week and next week. I like it. Comfy recliner. Okay. Yeah, and that just brings up a point. Do we have to trade today? I will look for some day trades. And when I day trade, and when you all are in the mastery with me, this is kind of what a morning of trading looks like. My entire trading life is geared to the first 2 hours of the day. Not that the rest of the hours aren't useful, but not to me. My style is really designed for the way that I operate. I'm far better. I wish the markets opened 2 hours ago. Right? The earlier the better. That's my power band for my brain. That's where the synapses are firing. I'm not a late day person. And actually, the markets are not friendly typically to late day traders, meaning the opening ranges and the initial balance ranges and the first 2 hours a day really do set up the rest of the day. And this is really important. And this is something we've been sharing in a lot of free videos. If you are an SPX trader, or frankly, any 0 days to options trade, QQQ, 0 days to options, SPY, IWM, these are all 0 days. It just seems that the SPX seems to have kind of owned that 0 days, but there's quite a few symbols that have today expiration. It is really important. I've been testing this for 6 months. So let me give you something that's going to save you a lot of grief. We're coming up into the end of 6 months of testing SPX. It's a big part of what's going to be discussed in our class. We have a special session for it, for the SPX strategy and how to position size around it, because one thing I found really cool was not something I was expecting. And if you haven't already, we'll have a webinar link for you all next Tuesday, less than a week away. My gosh. I can't believe how quickly it got here, but I'm stoked. Next Tuesday, the 24th at 8 p.m., I'm going to share with you what we've been doing and the results and how we've been setting things up and the tools that I've been using to do it. So while this was happening in April, I finally caved in and said, look, I get this SPX thing is pretty popular. Let me see what I can do with it, with the tools that I've got, and if I even like it. So I started applying some filters. I'm always thinking about how few trades could I put on for the best results. In other words, we've probably heard this before, minimum effective dose, right? What's the minimum I can do that's most effective? And then I build from there. And the thing that I found most surprising is with the strategy that we used and that I tested, and like I said, 6 months is going to be this month, is how small account friendly. And I never, if you would have told me, is SPX small account friendly? I would have said, what are you sniffing? Um, it absolutely is under certain circumstances. So that was pretty exciting because the whole theme of the class is account growth. How do you consistently, maybe I like that word consistent the best. How do you consistently grow an account, whether that be small or whether that be medium, large, or Godzilla sized? But a lot of folks have the small account challenge. And the challenge for a small account is, how do I trade around pattern day trading rule, right? If you trade more than 3 or 4 trades, you're done for the week or for that span of time, that 5-day span of time. And also, how do I deal with not having the budget to put on some of these larger trades, larger expense trades? The simple answer is you don't. But then what are you left with, right? There's a lot of challenges to that. So those are things that we've been testing, and I'm super stoked to show you all. But the one thing that was not on my bingo card was, can you make SPX small account friendly? And the answer is yes. So I'm really excited to share with you all what we discovered over that testing, and what those formulas are, what those recipes are in terms of taking any sized account and growing it. Because a lot of you have been seeing, look, I've been very, very, very openly sharing. These are the positions we have. These are the alerts we have. These are every single entry, every single swing trade that we've done up until this recap is up until the 16th, right? These are all the trades, losses, wins, everything. And then these are the trades as of the 17th. So we send those out to members so everyone can be on the same page as far as how are we doing? What are the results? Where did you buy? Where did you close? Where did you scale out? All right. So yeah, check out what we're doing. Sectorsecrets.com. I know, Tom, can you imagine Jerome Powell with pom-poms? I don't know what the market would do then. All right. So can we take a look at UNP on the daily? Sure. Union Pacific, part of the XLI, which has actually been a really strong sector. David, we've got an XLI position. So, and I'm kind of with you there in terms of the relative outperformance in that group. It's not in a trend. So then that would take us back to the way we build a watch list in the mastery, which, aside from risk management and position sizing, the one thing that I really did and have tested and know for most of my career is, what are we trading, right? What are we trading in expectation for a certain result? So I love that you're looking at XLI, David. Love it. But what are the best looking charts in XLI? Well, there's 3 that pop right out. 1 is GE, 2 is LMT, 3 is ADP. All right. Green momentum, green trend. So those are your uptrends. After that, I step back and say, all right, what is dominated by the most green candles? And that's where I agree. UNP would be there. ETN perhaps. Uber's not too bad. Maybe CAT. So that would sort of be the second go round of looking through this list. What are the best examples of strength? What are the next best examples of strength? And frankly, if you want to short something, short Boeing, right? There are weak names here, and Boeing would be it. So are there shorts in this group? Are there long put setups, bearish setups? Yeah, Boeing. So that's where I differentiate between a bullish watch list and a bearish watch list. And then we differentiate between what has the best chance for follow through. And I would say UNP would be in that group after, though, GE, LMT, and ADP. All right. So after that, it's just a buy the dip, my friend. After that, it's just wait for a pullback and get long. And I don't have a level for that. To be quite frank, I wouldn't trade it. But if I were, someone said, Rog, you got to trade UNP 246 to about 249 is one good zone. And then if you do get a visit to about 240.5, the anchored VWAP, that would be a really great level. And this is not a bullish chart, but rather bullish chop. So oversold buys would be great. All right. Next up is, and thanks for the question. All right. Next up, Tim asks, when is the class? The class is October 5, Tim, but the webinar, and I really want y'all to see what we're talking about in terms of, whether it's right for you and whether it's something you think will really lead you to where you want to go, which is account growth. Maybe you don't have a risk management plan right now or a position sizing plan, or maybe you don't have a plan for watch list building. These are all topics and problems, I think, for a lot of traders nowadays. The webinar is going to be on September 24, October 2, and the class is on October 5. All right. Next up, hey there, Earl. Thank you so much, says Earl. I've taken my account off a margin and made it a cash account. Step one, awesome. It's been the best thing I've done in my trading so far. Earl, I trade. For those of you who don't know, what is Earl talking about? Cash account? Rog, you don't use margin? No, don't need to. If we're looking at long calls and long puts, and I don't use spreads, talk about overcomplicating something that what you and I are doing is directional. We want to buy low, sell high. We want to find something that's on its way higher and not buy it at the high, or find something that's on its way lower and not short it at the low. But for the most part, we're in some degree directional traders. And this love affair, unfortunately, that's out there with this notion that you can trade and be neutral all the time. And that's not where typically account growth is going to be. What we are doing as retail traders, we're not hedge funds, we're not economists, we're not market makers, right? What we want to do is find something at a reasonable risk reward ratio and take advantage of the direction, play directional moves. And if that's the case, long calls and long puts will take care of it. And you'll notice here in our recap, there's no spreads here. I don't trade spreads. Straight up long calls, long puts in a cash account. And that may seem very simplistic at first. And then you realize every single advanced option strategy is just some combination of buying a put or call, or or selling a put or call. So, we're all directional to some degree. Even saying I'm a neutral trader is betting on no direction, which is kind of a direction, right? So the better we get at directional trades, the better we understand follow through, regardless of where we ultimately want to take our trading approach. Understanding the direction is really important. Okay, what are my thoughts on 3M swing trade? I'll tell you, Eddie, 3M was one of our setups in the mastery for shares. And I think we missed the fill on this. But do you remember what we missed the fill on this by? I want to say it was 10 cents, something crazy like that. I am bullish 3M, but we were bullish way, way, way lower. There we go. Way, way, way lower from here. 10 cents. Bot just said, yeah, we missed that fill. So I am bullish, but I missed my fill. But now I'd say keep an eye on 127.35. That might be a neat level to keep an eye on going forward. But yes, absolutely a bull on 3M. And one of the things that makes me a bull on 3M are some of the basic tools that we have running on the screen. And these are tools, by the way, that allow me to have that directional confidence. And let me show you what I'm looking at. Number one, these candle colors are not random. So those are green or bullish price action, bullish participation. That's neutral. Uptrend, right? That's all uptrend. And then this is neutral, right? But if you have an uptrend that goes neutral, are you bearish or are you just less bullish? It's a big difference. So this would be still bullish, but expecting kind of bullish chop. And anytime I go from a trend to a chop, uptrend to chop, I still keep continuation in mind. So we move up, chop, right? That's how the market usually likes to work. A lot of folks think the market does this. That's not necessarily true. There's way too much emphasis on reversals than retracements. If you're going to have a first expectation after a trend has started to wobble, let it be one of a retracement, not a reversal. And a retracement says this is more likely to continue after a brief break. Yeah. All right. So that's where we are in 3M, and that was one of our portfolio position setups in the mastery. I don't have a link yet for the webinar, gang, but I will let you know. Again, the dates are first webinar, September 2-4, next Tuesday, 8 p.m. Eastern. October 2, also 8 p.m. Eastern. I believe that's a Wednesday. And the class is Saturday, October 5, and that'll be at 1 p.m. Eastern. All right. Okay, gang. Be good to each other. I'll see you tomorrow. Same time, same station. 2 p.m. FOMC, 2:30 press conference. Buckle your seatbelts or pop your popcorn. And I'll see you tomorrow.